Hi, so thank you for choosing this video to watch. The video that I'm recording right now is not part of the main video. The main video will come in around 30 seconds. This video is an explainer video about the video that I've recorded that you will see. In the video that you see, that was recorded 3 days before this video, and I'm recording this video today. Why I'm saying this is because 3 days ago I recorded the video when the share prices of a company I mentioned as an example were different than what they are today, and the ones that I predicted to be true actually came out to be true. So go to the next video now. Hi there and welcome back to Wealth Workout. So in this video, we will be talking about what is a stock split and what do companies do with stock splits, why exactly they do it. And number 3, the most important question, why and how you can understand this concept and use this to make short-term gains, not long-term gains. This is a very short-term thing. Even if the company is not something you love, here's something you can do and make short-term gains. Now, usually what happens during a stock split is this. Company has some number of shares in the market right now, but the share price is so high that not everyone can afford it. And why does the company want everyone to afford it? Is simple. They want more people to invest in the company. Simple as that. So if more and more people buy the stock who were not able to buy it earlier, what happens is that demand increases and the supply remains the same. So basically the share price increases, meaning the people who already invested in the stock before it was split get returns. A lot of returns if it goes up and explodes. That usually doesn't happen, but let's say you can make quick gains of around 9 to 10% on this. Even more than that, it all depends on how quickly you enter the market. So there are 2 types of gains you can make. First, initial gain. Immediately after the company announces stock split, the share price starts going up. Why? Because they know once the stock is split, more people will buy the stock because this is a good company. Okay, this is Apple here. You can always watch out for good companies, and this will always hold true for companies that are financially strong and have displayed consistency in revenues despite the problems and situations that occur in the economy. Now look at how clever Apple is. They have cleverly positioned this stock split after the results came out for the previous period. Why did this happen? During the previous period, I don't know if you know, but Apple was able to grow its revenues despite the lockdown. So isn't that great? So people are already crazy about this stock because they say, oh my god, they're still making money even during this crisis. So that is exactly why they have announced a stock split right now, because the share price grew from $370 to $440, I think. $70 increase just because of this small reason that company has made huge returns on investment despite the lockdown. Okay, so people are happy with this. And beyond this, the company's share price has again grown to $460 right now. I'm anticipating that is because of the stock split. And it can still grow to $480 right now. So what exactly is a stock split? Companies, I think you would have understood, do this when the share price is too high. So what they do is just give away a few shares for free, and the total number of shares increase. That's all. Total value of the company remains the same. You just divide by more number of shares now, so the share price decreases, and it's easier to buy it, right? So right now Apple has announced 1:4 stock split, meaning for every 1 share you own, in the end, after the stock split is taken place, you will have 4 shares instead of having that 1 share. It will be broken into 4 parts. So your share price will come down by a fourth. So let's say right now the share price is at 460, and as people understand that the stock split is going to take effect, which will take effect on 31st August, then slowly the share price, as it starts increasing, it may even reach $40. Let's say it reaches $40 and the split takes place on that day. Divide that by 4, you'll get $120 per share. Even after the split, here's what happens. People who previously weren't able to buy the stock at $480 or 400 anything can now buy it at $120. And now, as again more people buy it, the price again increases from 120 to, let's say, 130. So you're making $10 off 1 share. You had 4 shares. $40 increase this way, and the initial $20 that increased from $460 to $480. So you make $60 of gains on investing $460. So it's not a very huge gain or something, but this is something you can make by investing a lot of money. But again, this is not something I'd say risk proof. This is definitely risky, but it is not risky if the company is amazingly well. Okay, just like Apple. So let's take another. So the return that we talked about comes close to 13% return in short term, which is not bad. Okay, in 1 day or even in 2 days. But here's the thing: you cannot make this return in 1 day. As soon as the share price starts climbing, you have to get on board, because as soon as people realize the stock split is going to take place, it starts growing. So the later you invest, less your returns are. You have to invest earlier. And I remember creating another video when this this very stock was at $370, about how it will reach $420. Why? That was just because of some other reasons, and now I expect it to reach much higher numbers. But now after the stock split, I don't think that's possible. So we'll just divide that price by 4. I was expecting it will go to $500 right now. If you divide that by 4, you'll get $125 if I'm not wrong. Yeah, that will be the price you'll be getting, and I think you should target that price. I think it might even reach $130 per share after the stock split. So right now I think I would buy this share for long term, because what happens is when you have it for long term, people more and more will buy it. The reason is simple: Apple wants to create returns for its investors. Now how you can make money is this: as soon as you see a very good company like Apple offering a stock split, immediately buy the share. It will take few months for the effect to come into place, but in those few months you're going to make, let's say, 13 or 14% returns. This 13 or 14% return on investment is a very small number. Okay, keep in mind this share grew from $440 to $460 just because of the stock split news coming out, and probably even more of that is attributable to stock split. You don't know. So keep that in mind. You have to jump on board as soon as you see a stock split coming in place for a very good company. Number 2, wait till the effective date. As soon as the effective date comes, give 1 day or 2 days, and that will be enough for people to buy the share who are eager to buy the share. All of the people who buy the share afterwards are just because they got to know about the share's price coming down. Okay, so they are not active investors, they are not someone who's ready into the market. So after 1 or 2 days, immediately sell the share, and you will see you made some good returns. So this is how stock splits work, and you can make money out of it. So if you like this video, you know what to do. If you love this video, you know what to do. Thank you for watching. This is Wealth Workout. Peace out.